think ETH is less inflation resistant because more and more coins can be issued, much like a fiat currency?
So it's, just think of it like money that you can do things with as opposed to just money.
Because Bitcoin has a fixed supply, and there's only 21 million coins that will ever exist.
I mean, they're two very different platforms with two very different functions.
Virtual currencies. It's almost like they got their feet wet with Bitcoin, and that kind of worked.
I think a lot of it is just misunderstanding of like what it is, because in the news headlines, the news media, you look up crypto scam, there's people getting scammed all the time.
Well, welcome. We're back for another episode. Glad you guys are able to join us, and thanks for subscribing, thanks for watching, thanks for listening, and make sure you click that like button wherever you're listening, wherever you're watching. We appreciate you guys. And check out our other episodes at mikecpodcast.com. That's our website. And today, our guest is a former award-winning broadcaster turned trader based out of Alberta, Canada. He has over 10 years of successful active investing experience. I called him a Jedi off mic. He's also, since 2019, been mentoring retail and institutional investors at stockmarketmentor.com. His history in the media gives him an edge in being able to interpret a lot of information quickly and break it down into straightforward analysis. And he also hosts a podcast, hasn't done an episode lately, but it's at hotwallet.ca. And he's joined us in the past, and he's a good buddy of mine, Scott McGregor. Scott, thanks for being
Mike.
here again,
Thanks so
man.
much for having me, brother. I don't know if I'm a Jedi, but I appreciate the kudos and appreciate coming on your podcast again. I love talking crypto and love our exchanges offline of text messages and GIFs and articles and stuff like that all the time. So appreciate connecting with you and with your partner as well.
Yeah, no, I appreciate that, man. Those texts are fun. I love when you send those. Like if Bitcoin has a real bullish day, you'll just send me this meme or something, and there's no words. You don't say anything. You just send the meme, and like I just laugh, and they're always funny. So
always thinking of you, brother. I'm always thinking of you. When
that.
Bitcoin's mooning, I'm like, oh, Mike's loving this.
For sure. And if there's a bear market, get creative.
Yeah.
We'll try and laugh through the pain, right?
Exactly.
So today I want to talk about Bitcoin and Ethereum. Those are the two largest digital currencies. They're very different, but they're the ones that hold the most value. They're the most popular ones out there. And while Bitcoin is primarily a medium of exchange, Ethereum's a little bit of a different animal. So I was hoping with your expertise and your background, you can break that down for us a little bit.
Absolutely. Yeah, I mean, they're two very different platforms with two very different functions. They cross over because technologically one was built, with knowledge of the other, and that's Ethereum. Ethereum was built with the knowledge of Bitcoin, where Bitcoin was just kind of birthed into the world. And so very different platforms, very different ideologies, but both, very interesting from an investment standpoint.
Right. Okay. So I want to talk about the fixed supply aspect because Bitcoin has a fixed supply, and we talked about that last time you were here. There's only 21 million coins that will ever exist. It's in the code. It can't be changed, at least not easily, unless there was some hostile takeover of the network, which is highly unlikely, whereas ETH is a little bit different. It has no fixed supply, if I'm understanding this correctly, so its controllers can keep issuing more and more ETH. And if I have that right, do you think ETH is less inflation resistant because more and more coins can be issued, much like a fiat currency?
So I wouldn't say ETH is less inflation resistant. I'd say it just has different inflationary metrics. So Bitcoin has a programmatic release schedule, and it's cut in half every 4 years. We just went through the Bitcoin halving in April, and typically, before the halving, we'd see about 900 new Bitcoin come into the market produced by miners on a daily basis. And then that got cut in half, and now it's around 450 Bitcoin a day that get produced and mined by Bitcoin miners. Ethereum is a different in terms of its release schedule. It's not as programmatic. It doesn't have, as you say, a fixed supply, but it honestly, it doesn't need to, because it's trying to do something different. It's not trying to be, a hard money that's just a thing that has value that you can send to someone else. It's doing different things, and they are building things on Bitcoin like ordinals and whatnot that you can do different things with as well. But traditionally, that's not really what the idea of Bitcoin being a digital gold is really about. And so, when I think of Ethereum, I think of Bitcoin as digital gold, and I think of Ethereum as digital oil.
Okay.
And so when you think of digital gold, you think of gold, right? What do I do with gold? I buy it, I hold on to it, it stores my value, and ideally down the road, it's going to be worth more. And with oil, what do you do with oil? You do things with oil. Oil goes into engines. Oil runs, you could say oil runs the world, because it is the main source of energy for most people. And so it just does different things, and therefore it needs to have different supply dynamics.
So what are some of the different things it does? I'm a little ignorant on this myself. Fill me in on that. What's it used for? I understand the analogy of oil and gold, and I love it. It's very clear, and it helps me envision what it is, how they're different. But what are some of the functions of ETH or Ethereum?
So ETH is programmable money. If Bitcoin is money, ETH is money that you can program to do things with, whether that's store and stake for a yield, whether that's to execute a smart contract, or a purchase between people, like an NFT or something like that. That's typically what Ethereum can be used for. So just think of it like money that you can do things with, as opposed to just money. And so it has different attributes to it, where it doesn't necessarily make it less value. Well, it can make it less valuable because of the supply dynamics, but it just does different things. It's programmable money. So, for example, let's say we have smart contracts on rental agreements, right? Like everything we do in life, Mike, is a contract.
Yeah.
Me coming on this podcast, that was a contract between you and I. There's no money exchange. It was just a friendly. Can you make it on this time? Yes, I can. We have a deal. It's a social contract. And so you can do things with money right now that causes, that essentially means that there's a person in between that contract. So it's me, it's, my lender for my mortgage, and then there's a guy in between that helps me get that rate. And with smart contracts and digital contracts, for example, we could probably do mortgages without having a middleman that takes a piece of that percentage of my mortgage. And so, that's just one example of a contract between two people that we could potentially digitize in the future, so we don't need that middleman. Or, for example, if you're a renter, imagine a world where you have a smart contract on a rental property, and the person who is renting from you has to pay their rent by a certain date. And if it doesn't, if that money doesn't come through, maybe there's a trigger on the rental contract that actually locks the front doors so they can't get in. That's just, again, I don't know if that's something that will ever exist, but that's kind of the idea of like a digital smart contract that doesn't need anyone to sit there and wait for that money to come, because the software will do it for them. So that's just a general idea of Ethereum. So Ethereum is essentially a programmable type of money, a programmable platform for money, where Bitcoin, it's just money. You know what I mean? Does that make sense?
It does make sense, definitely. So what are some examples of, you gave us some examples of what smart contracts can be used for. Are those in use? Has that gone into adoption?
So BlackRock, for example, the people who have the most famous and most popular Bitcoin ETF right now, they're actually using Ethereum as a yield generating investment contract. So that happened a few months ago. I think shortly after you and I did a podcast, BlackRock launched a tokenized fund through Ethereum. And so it is something that is starting to really proliferate within investment houses, as some of these cryptocurrencies and digital assets become, essentially legitimized Wall Street grade investment products. So it's starting. It's slow, but it is coming. And Ethereum is the one. The highest market cap. It has the second longest trading history. So it is the one that is the most trustworthy right now. There may be others down the road, maybe on Solana, maybe on Avalanche, or Polkadot, whatever it might be. But right now, people are focused on Ethereum because of its history and its reliability.
Yeah, and you sent me that article earlier this morning, just talking. It was from Pump, I think, talking about how Wall Street is now eyeballing other virtual currencies. It's almost like they got their feet wet with Bitcoin. And, that kind of worked, right? I mean, the results have been pretty good. We're in a bull market right now. So, that was interesting. And so I don't know if it's a tidal wave, but there's a influx of institutional money pouring into these different currencies now. And those Bitcoin ETF approvals here in the US were a catalyst for that, I think.
Well, absolutely. The Bitcoin ETFs are the most popular and most successful ETF launches in all of history. And so Wall Street is smelling that. They smell money, and they say, what else can we do? Larry Fink was on television shortly after the Bitcoin ETFs got approved and basically said, we want to tokenize everything. We want to ETF everything. And so it is in their prerogative to get control of this market because it's money. Wall Street's job is to make money. All of these people who work in investment banks for JP Morgan, Morgan Stanley, Bank of America, whatever, their job is literally to make money. That's it. Doesn't matter what you need to do, make us money because that's your job. And so, they smell money there. They see opportunity. They see how successful the Bitcoin ETF launches have been. And now they're like, okay, what's next? What's the most trustworthy one? And the next one is Ethereum. And so Wall Street smells that as an opportunity because of how successful the Bitcoin ETF launch was. If the Bitcoin ETF launch was a drop in the bucket, no one really cared, I don't think you'd really see a push from these major institutions to get these the next level of Ethereum ETFs going forward. But you definitely are, and now it's becoming an actual political fight where the super PAC for crypto is one of the most well funded in Washington D.C. because there's money involved and there's a lot of people involved. There's 50 million crypto holders in America alone, and that's that can swing a vote. And so this November, when it comes to the election, it's going to be really interesting to see if the Republican side is able to weaponize the crypto vote to vote for them, because the Democratic side and Gary Gensler and the SEC has really been fighting this crypto innovation for years. I mean, we've seen them sue Coinbase. Coinbase is the most reliable exchange in the United States, and they're currently being sued by the SEC right now. And so, it's been a hostile environment. But again, Wall Street smells that money, and so they have a prerogative to push these things through, to get these things approved, and now we're seeing that play out with Ethereum. Where that leads down the road, some people think, okay, well, maybe Solana is next in terms of an ETF. Probably not for a couple of years, in my opinion, because there are certain things that have to happen. The reason that the Ethereum ETF was able to get approved so quickly is because they already had futures contracts. The futures for Ethereum have been trading for a couple of years, and so they can measure essentially that market, look for the correlation to the spot market, and then say, okay, is there manipulation in this market, or is there a high correlation between the futures and the spot? And they found a 97% correlation between futures and spot to say, okay, this looks like it's not a manipulated market. Ethereum is classified as decentralized, so there is no one person that controls the protocol. There's no one person that has all the Ethereum or whatever. It is a distributed market, similar to Bitcoin, different than Bitcoin, but similar to Bitcoin. And so, okay, if they have the same attributes to some extent, let's tokenize that. Let's ETF that. So that's what's coming down the pipe now. And now we have a bit of a framework for what the next ones will look like. And that's why, that article I sent you from Anthony Pompliano is altcoins are coming.
Yeah.
because it's only a matter of time. Now that we have the framework of, okay, we need an established futures market, and then we need to make sure that there's no manipulation, and then we need to make sure it is an actual decentralized protocol. There's our framework. What can we ETF next?
So why the hostility? We talked about you mentioned regulators and how they're not too open to it, especially on the Democrat side. What do you think that is?
I think a lot of it is just misunderstanding of like what it is. Because in the news headlines, the news media, you look up crypto scam, there's people getting scammed all the time. And so even now, I read a story today where the New York Attorney General came down on two people who had scammed, $1 billion from 53,000 different people or whatever. And so there is still kind of like this underlying scariness when it comes to some of these markets, because as it stands right now, Mike, anyone can make a meme coin. There was actually a Hulk Hogan meme coin, and Hulk Hogan pumped it on his Twitter and then deleted those tweets and rug pulled $15 million. So,
Wow.
there is still a lot of fraud in this market, and so that's one aspect of it that I believe that they will probably want to clamp down on. But then also at the same time, you think to yourself, well, they allow gambling, they allow sports gambling now, and so I think of these meme coins generally as gambling, and if I can bet on a game in the stadium while the game's happening. What is stopping people from, other than having a gateway, like a regulated gateway to trade these meme coins, what's stopping people from, jumping in that casino? And we're kind of seeing that play out right now when it comes to GameStop and options and whatnot. So there's still a lot of regulatory clarity that needs to be laid out. But we saw SEC Chair Gary Gensler on CNBC, and Jim Cramer was like, when are we getting a bonk ETF? When are we getting a Dogecoin ETF? When are we getting this? When are we getting that? Because some of these assets trade so much money. Some of these assets are hundreds of millions of dollars in market cap or billions of dollars in market cap. And I think the regulators really kind of want to get a stranglehold on that. So there's still a lot of potential fraud or money laundering that could happen with some of these cryptos. Those are not typically ones that I recommend to people in terms of investing in or looking into. I'm all about legitimate software, legitimate projects and stuff like that. So I keep it pretty mainstream, but don't get me wrong. There's still an opportunity for, bad actors are going to find a way, as they always do. Just like with phone scams and email scams and now, crypto scams. And so I think that's one of the reasons for the hostility, is because they probably hear from law enforcement people, people in their jurisdictions to say, I know someone who got scammed, or I know someone who got rug pulled. I got scammed myself. I clicked a wrong link on my, on Twitter, clicked a wrong link, and I lost like $3,500 worth of NFTs because it just sucked it out of my wallet. And so, even people as I think I'm pretty educated about the market, but if I'm not really paying attention and really thinking deeply, even I can make a mistake and get some money taken away.
Yeah. So the volatility aspect of these different crypto coins that are around, do you think that'll stabilize as more institutional money pours in? We talked about that last time you were here with regards to Bitcoin, and you were sensing some stabilization in the price because now there's all these institutional inflows. Do you think the same is going to happen with these other coins? Let's say the projects that have a more stable business model and not some of the more scammy coins that are out there, because there's thousands, as we both know. Mm-hmm. What do you think of that?
I think we're seeing it now. I think we're seeing it play out with Bitcoin. We had nearly $1 billion come into Bitcoin the other day through the ETF flows, and price, it did go up, but it wasn't like it used to be where it would go up, $4,000 in a day. And so I think we are seeing that stabilization. That said, and I think a lot of it has to do with hedging, because if I'm a major institution, I don't just go long one way. I hedge that bet the other way because it's in my best interest not to lose money for my clients. And so we're seeing a lot of, a lot of hedging right now when it comes to even spot Bitcoin. So we're seeing a lot of major institutions that will long Bitcoin and then short the futures and as a hedge. Or we're seeing institutions long Bitcoin, short MicroStrategy, or long Bitcoin, short Bitcoin miners as a hedge. And so we are seeing a bit of an equilibrium in terms of the volatility.
So with the popularity that it's gaining just because of the acceptance from Wall Street, I know Wall Street's not going to be encouraging self-custody of Bitcoin, but there is that option to self-custody Bitcoin, and the the maxi community of Bitcoin will say always, not your keys, not your coins. And I mean, that makes sense. I agree with that. Do you think that process has to be simplified somewhat? Because, when you explain having a hard wallet and self-custodying your Bitcoin, it's a little bit more complicated than just opening a bank account somewhere or a brokerage account. Not much, in my opinion, but do you think there's a way to make that easier? Maybe some kind of, another something built upon the layer of the Bitcoin network that could somehow make that easier? Do you think that could ever happen?
I think we're starting to see that. Coinbase announced a smart wallet where they're trying to make it easier so you don't have to remember a 12-word seed phrase, because that could be a barrier to entry for some people. Interestingly enough, Mike, we've also seen a massive drop in active addresses. So active addresses have almost gone down by 50% since March in terms of on the Bitcoin network. And so, we're seeing people be less active in their wallets right now. And I think a lot of that has to do with just the barrier to entry of wanting to hold Bitcoin. It is work to hold Bitcoin, just like it's work to hold a bar of gold or gold coins or silver coins, whatever it might be. And a lot of people just don't want that trouble. And so they will forego the right to own their own Bitcoin or hold their own Bitcoin by using one of these custodians like BlackRock, Fidelity, ARK Invest, or Bitwise, or whatever, via the ETFs. And so I think that we're seeing more of that come. And I think my opinion is that not your keys, not your coin is going to be less important for most investors. Most investors, regular investors, they just want to participate in the upside. They don't have a philosophical view. It's just, oh, this is going up, this is going to make me money. Okay, I'm gonna own this. For some people, though, just like when you have the hardcore gold bugs, that they have their gold coins, they have their gold bars in their fireproof safe or whatever. We still see people doing that, even though technically you don't have to. You could have a bank do it for you. And so I think that we're still going to see that, but I do believe that for the mainstream, it's probably going to be a lot easier, where it's like a fingerprint on your phone, or some sort of 2-factor or 3-factor authentication or something like that. So I think the software will develop eventually. It has to onboard more people, because otherwise we'd have 4 billion people using Bitcoin right now. And why isn't 4 billion people using it right now, Mike? Because it's hard. It's hard to do. It's a little confusing. There's a barrier to entry, and I'd rather just scroll on TikTok or play Monopoly on my phone rather than try and figure this thing out, when I can just buy the ETF, and it's pretty good in terms of the matching of performance.
Yeah. Is that Coinbase wallet you mentioned actual true self-custody, or are they the custodial holders of it? Just so I understand.
No, I believe that the Coinbase wallet is a non-custodial wallet.
Okay.
I believe you do own the keys. I have the Coinbase wallet myself. I'm not using it. I was using it a few weeks ago, and then I kind of moved all my money out to stake. Most of my position is, I have my Bitcoin. My Bitcoin's in a wallet. Don't touch it, don't look at it. But in terms of my active investing stuff, it's mostly Solana, just for disclosure reasons. And I'm staking most of that through Coinbase or through another wallet or whatever. So I don't put a lot of money. I don't have a lot of money in that right now myself. But I know in my wife's wallet, that's typically where her Bitcoin is right now. So it is, it's a good wallet. It's fine. It's a good place for people to start. If you're just thinking about getting into crypto, thinking about Bitcoin, Just, go mainstream, get a feel for it. You can always move it around. You can always get, oh, you know what? I actually just want this Moon wallet, MUUN, Moon wallet. I just want this for my Bitcoin and this, because this one I know I can trust. And that's fine. But for most people, just start simple, keep it easy, and start with the Coinbase wallet, see how it works. And then, eventually you can evolve and move, as you can move your money around. And so you're never really locked into one option when it comes to crypto. And I think that that's one of the main things that I love about it. If I'm mad at Coinbase, I don't like Coinbase, bye.
Yeah.
I'm using Kraken. Oh, I'm mad at Kraken. Cool. See you later. I'm using the Phantom wallet, whatever it is. So, you're never really locked in. And that, I believe, Mike, really fosters true competition, because they have to be good, they have to be secure, they have to be easy to use. And if they're not, people just move away from them.
Yeah. So you talked about staking. Can you define that for any of our audience that might not know what that is?
Sure. So staking is essentially, keeping your tokens locked up to secure the protocol. And so a lot of what Ethereum is, and a lot of the value in Ethereum, is because the token is worth a certain amount of money, and people are securing that network by keeping those tokens there. And so what that does is that prevents those attacks. You mentioned before of a potential attack on Bitcoin. And one thing that can stop that is just pure dollars, because if you want to take over the Ethereum network, you're going to need trillions of dollars to do it, just because of how valuable the network is. And so staking, what that does is it helps secure the network. And so that's what I'm doing right now with Solana. And I do that for a yield. So I get rewarded in tokens on a daily or weekly basis, just by securing the network.
And so there's either weekly or daily options. What are all the different options for staking time frame?
Well, I can't choose. I'd like to be paid weekly. I'd like to be paid daily. It's just whatever the protocol is, and they're all different. And so that's the thing. If anyone wants to get into staking, there are some really important things you got to worry about in terms of having your money locked up for a period of time. If you are someone that is price sensitive and looking to trade, you don't want to stake. And typically you don't want to stake in a bear market, because you'll just bleed money. I did that for a while. I made that mistake where I was staking something and I was staking it for like 15%, but then the asset dropped 95%. And I'm like, well, at least I made my 15%,
Yeah.
but I lost 95%. So, in some instances, it doesn't really pay off. But if you're in a sideways consolidative market like we are right now, or if you're in a market that is going up and to the right, then staking is a great opportunity for you to essentially accumulate more tokens without having to spend any money. And so my strategy, I'll share it with everyone right now. I kind of have like a two-pronged strategy. So if I'm long something and I think that something is going to go up over a period of time, I'll buy more with money, but then I'll also stake it at the same time. And so I'm getting double. I'm getting double the amount potentially of money that I would normally if I was just holding the asset. Now, of course, there are unlock periods with staking. So with Solana, for example, there's a 5-day unlock period. So if I decide that I don't want to stake my tokens anymore, if the market starts to roll over or whatever, I essentially am screwed for 5 days. I can't do anything. And so that's why you really got to know the market dynamic that you're in, because if things roll over or an asteroid hits the earth or whatever, you're going to be screwed. And so you have to ideally have a good cushion in your investment. You have to be okay with that risk. And, there's a lot of different factors and whatever. So it is not a risk-free thing. There's no risk-free money in investing, and so I would definitely just read the risks and understand what you're going to do when it comes to staking. But that's essentially what it is. You're generating income, getting a yield for holding these tokens. And for some institutional investors, they love that. I mean, you think of fixed income, or you think of these long duration assets where they're like, they got to lock up $1 billion for 20 years. They're fine with this. because they know that they're getting that 2%, and that's all their customers care about. And so I believe that staking is going to be pretty popular in terms of Ethereum down the road, and in terms of institutional adoption. We actually saw the SEC force ETF issuers, Ethereum ETF issuers, to remove staking from their prospectus, because some people, the institutions wanted to stake their Ethereum for yield while they're holding it for their customers. And that would give them essentially another 2%. And so if you're holding $1 billion worth of Ethereum, 2% is actually a good amount of money. When you're not doing anything, you're just holding it. And so it's still something that I think the regulators don't fully understand, or don't, maybe they understand it, but they're not willing to allow people to take that risk yet, because we are so early in this crypto adoption cycle. But I think over time that's going to be a little loosened. But I think it's fine for them to start with the hard rules, and then kind of ease your way into it, as opposed to doors open wide, everyone can do whatever they want, and then it becomes a big cluster.
Yeah. What
It's an official term, by the way.
what kind of yields? You mentioned 2%. Is there like a different yield structure depending on how long you stake, or how does that work?
It's usually APY, so it'd be 2% APY. Solana, for example, Solana block rewards actually just went up, and so I think Coinbase is offering over 6% APY. And so, if I'm staking, let's say I'm staking 1,000 Solana tokens, maybe I get 7 free Solana tokens a month, something like that. Again, it's bad math, or 6, whatever it is. I'm just generalizing here, but that's kind of how it works. And then other tokens have different ones. The Polkadot, for example, I think they're over 14%. But Polkadot also has a 28-day unbonding period. So as I said, when you decide to unstake, you can unstake, but you won't get your money back for 28 days. A lot can happen in 28 days. A whole market structure can change in 28 days. And so if you're scared of that risk, and I think it should be, it's not something you'd want to do, but that's up to everyone else to decide. So I think Solana is pretty good. 5 days, 5-day unlock period, I think is pretty safe for most people. I don't know what Ethereum is offhand, but that's how it works, essentially. And so you're securing the network, you're helping to secure the network, you're helping to stop it from getting essentially attacked, and you're getting rewarded for that. And so the money is generated from transaction fees and people using the network. When it comes to Ethereum, there's a portion of the Ethereum that is burned with every transaction on the Ethereum network, and then there's a portion that's given to validators as a reward. And if you are staking with a validator, you get a small percentage of that reward. And the same thing with Solana. There's transactions, millions of transactions a day, and the validators make money from processing those transactions. And as a staker, you also make some of that money.
So how's a validator different from a Bitcoin miner?
Well, just essentially it uses less energy. That's what it does. So as we know, Bitcoin uses a lot of energy to process complex mathematical equations and essentially solve a problem on within the algorithm to produce these Bitcoin. And that's the reward that miners get. When it comes to Ethereum, as you know, went from proof of work, where they were using miners, now to proof of stake, where they're using validators. And it's very similar in that way, where they, instead of trying to, because they have all the tokens already, they're not trying to mine new tokens, they're just validating transactions.
Okay, so Vitalik Buterin is the innovator behind Ethereum. Why do you think he created it? What was the digital asset market missing? And what has, you touched on some of the uses already of it, but tell me about that. What do you think was his vision?
Well, I think everyone was, just blown away with how innovative Bitcoin was. This came out of nowhere, and really kind of took the world by storm in that way. There were other tries at making digital cash before, but this was the first truly decentralized monetary network. And it did one thing, and it does one thing really well, but it doesn't do everything. And so I think Vitalik Gavin Wood and Charles Hoskinson came together and said, well, this is interesting. This is money. What else can we do with it? And then that's when they developed the idea of a smart contract or programmable money. And so, as I mentioned before, there's different things that you can do with Ethereum that you can't do with Bitcoin. And there's things that people don't want you to do with Bitcoin. Bitcoin, as it stands right now, is so good. It's so powerful, but it only does one thing. There's nothing wrong with only doing one thing. It does that one thing really, really well and has for years. But it can't do everything. And so the idea is, let's build a software platform that can do more things than just send money from one person to another, send value from one person to another. And so that's really where that came out of. And then Solana builds on top of that and says, wow, okay, so if Bitcoin just sends value from one person to another, and Ethereum sends value to one person to another, but you can also program it. Solana says, yeah, let's do all that, but let's do it really, really fast instead of taking a long time. And let's keep our fees really low. So we'll scale in a different way than Ethereum is scaling. And so you have different tokenomics. There's much more in terms of the supply with Solana when it comes to Ethereum, just like there's difference in the supply from Ethereum to Bitcoin. And so it's just taking money and doing different things with it. With Solana, they're building token extensions where you can actually, instead of money transferring on a public ledger, you can actually program it to make it private. And so if I'm a business and I want to send USDC to my employees as a form of payment, well, maybe I don't want that on a public blockchain. Maybe I just want that in an internal blockchain or something like that, where I can send, I can pay my employees, but their pay isn't public, that everyone else can then Google it and, look it up on a block explorer or something like that. And so, everything kind of builds on itself. Just like we did with the internet, man. I mean, when the internet first came out, it was like, oh, cool, this is an email machine.
Yeah.
I can email people. Now I'm talking to Mike from, on the other side of the continent in real time, and he can hear me in real time. And so everything builds on itself. And I think ultimately it's going to be great. It's going to be great for Bitcoin because Bitcoin can continue to do that thing that it does really well and not change. Michael Saylor doesn't want Bitcoin to change. He's invested billions and billions of dollars in this thing because it has the type of dynamics that it has. And so he doesn't want it to do different, he doesn't want it to do the things that Ethereum does, because there were a lot of problems building and developing Ethereum, and every time they do an upgrade, it's kind of let's keep our fingers crossed. Just like anytime you do a Windows update, you're like, is this gonna screw my computer over? I don't know. And so that's the growing pains that some of these other protocols like Ethereum and Solana are going through. We saw this earlier this year where Solana was having problems with transactions because they were having trading bots try and do 55,000 transactions in 1 second. And it was crashing the network. It wasn't built for that. Now, down the road, will that be possible? Absolutely, because they're trying to build what's called a fire dancer validator that can do potentially 1 million transactions per second. That's not what Bitcoin does. And so it's just about, they just build on each other. They try new things, and there's nothing wrong with Bitcoin and being amazing. I have Bitcoin. I support Bitcoin. I love MicroStrategy. I think, what they're doing with their treasury is so innovative. And we're seeing other companies do that as well. But again, it's just about separating yourself from that philosophy of Ethereum bad because it has more tokens versus Bitcoin good because it has less.
Yeah, man, I wish I was smart enough to buy that MicroStrategy stock before this bull run. I missed that one, man.
I got my wife in at around 300.
Wow.
And so, I've just been holding that. She's just been holding that.
Yeah, that's awesome.
So that's one of my biggest positions right now, full disclosure.
Uh-huh.
And so, I'm looking, I think it's going to do well if Bitcoin continues to do well, but it's not a straight line, because there are people like Carisdale Capital who are currently shorting MicroStrategy and long Bitcoin because they don't see the value of a company. They think it should be valued at just the amount of Bitcoin that they have, not at at any premium. Excuse me.
Yeah.
So, anyways, I'm kind of getting off the rails, Mike. I
Fine,
apologize.
man.
I kind of do this with your answer.
I love it.
With
No,
my
I love
answer,
it.
I kind of go all over the place and kind of build on myself. But yeah, essentially that's how I think you got to look at it. So that's what really Vitalik was trying to do. He was just trying to take something that Bitcoin was and then do different things with it. And and I know that there's a lot of Bitcoin maximalists out there who are like, this is wrong. This is not what it's for, and that's totally fine. And you can express that view in the market with your money. But as we've seen with the approval of these Ethereum ETFs, market doesn't care, man. They just want to make money. And so I believe if you have blinders on and just think it's Bitcoin or nothing, I think you're going to miss out on a ton of opportunity in this space, because there's some really interesting software that's being developed in digital assets. And there, Bitcoin, I believe, has a chance to go to $1 million. But if it does, what is that? That's so that's 10x from where it is now, roughly. Maybe 11x from where it is now. Okay, that's 11 times your money. But VanEck came out the other day to say that their bull case on Ethereum is 154,000 per token by 2030. And so, well, that's a lot more than 10x. And so if you have blinders on, I think you're just going to miss out on massive opportunity. And even Michael Saylor says that. Even Michael Saylor, once the Ethereum ETFs came out, he said you have to redo your models, because Bitcoin will always be Bitcoin. It'll always do the great things that it does and the things that we love it for. But maybe there's an investor out there that wants to invest in something that does more. And shouldn't that be allowed? And so that's what I think the market is saying is, maybe a Dogecoin ETF is pretty dumb, and I think it's dumb, and I don't trade meme coins or any of that shit, because I think it's a joke. But when there are real innovations happening in some of these softwares like Ethereum, like Solana, and the like, I think having blinders on is just going to make you miss out on massive opportunity. So, my recommendation to everyone, even if you're a Bitcoiner, and Mike, I know you are, is just keep that open mind. Because if you thought Microsoft is the only software that matters, Apple's garbage, Amazon's garbage, Google's garbage, then you missed out on massive opportunity by getting in on those. And so keep an open mind when it comes to this market cycle, guys, because I believe the next 5-10 years are going to be really interesting and really make you really have an opportunity to make life-changing money. It's not going to be all up in a straight line. There's going to be a ton of up. There's going to be a ton of down. There's going to be if you're holding assets going sideways, it's going to feel like you're chewing glass. But don't lose sight of that long-term goal, because you look at the market cap of what crypto is now, just the entire crypto market. And I'll look at it right now, Mike, just so we can be up to date on this.
Yeah.
The total market cap for everything is $2.5 trillion. That's it. 2.5 trillion.
That's all.
And if you look at real estate, if you look at the gold market, the gold is 14 trillion.
Mm-hmm.
So if Bitcoin can even just match gold, or if crypto can match gold, we're looking at 10x just to get there. And there's going to be a lot of vehicles like Solana, like Ethereum, that are going to massively outperform, because once you get to a certain price level, you kind of price yourself out of Joe Blow getting access to it. Like right now, Bitcoin is under $100,000. I don't know about everyone else, but most people could scrape together $100,000 probably if they want it bad enough and get at least one Bitcoin. There's going to be a time where Bitcoin is $350,000. That's out of reach for most people. Yeah. And then they look at the opportunity of, okay, if Bitcoin doubles, that's 650,000, but that's only a 2x as opposed to Ethereum that might be a 5, or Solana that might be a 10. You know what? I'll move some money over there. And so keep that open mind with all of these digital assets. Focus on use case. Focus on real software applications. Does it make sense? If meme coins, to me, celebrity meme coins, Mike, they don't make sense at all.
No.
I don't get them. What's the value other than you're pumping on, a celebrity is pumping a coin that they own most of them, and you are along for that ride. but that ride can only last so long.
Yeah.
Eventually,
Yeah.
Iggy Azalea is going to want to take profits on her mother meme coin, and and you're going to be left holding the bag, and that's going to suck. And so you really want to focus on applications, focus on software that people are going to use, that's going to onboard more people to crypto, and really revolutionize the financial system like we need it to be done.
Yeah. So the different use cases you laid out for Ethereum, some of that stuff, a lot of that stuff, it sounds like, is handled by institutional banks as far as, mortgages and things like that. Do you think there's a time where they could replace that, the Ethereum could replace institutional banks? Because there's clearly hostility from that environment to these different digital currencies. Jamie Dimon's been, talking, giving his opinion on this whole technology. The late Charlie Munger didn't like it. Like, there's a lot of institutional personalities that aren't for this. Do you think it's a threat to them?
I mean, they have so much money that I think that they're going to use everything in their power to make sure that they don't get themselves out of that market. Jamie Dimon can go on television and talk about how much he hates Bitcoin as much as anyone else. But internally, JP Morgan uses crypto. They use their internal bank blockchain. They have a JPM coin. And so, they can say that they hate it as much as they want, but ultimately they are evolving in this technology themselves. They're going to try and keep a lot of it for themselves. They're not going to be like, oh, what public blockchain can we use? No, they're going to say, hey, you guys are really smart. Make us this, copy this. And a lot of these softwares are open source, so they're easy for someone to go, oh yeah, JP Morgan coin, we just rewrite it. Done. There you go. We can do everything that this platform can do. So that's I don't think that kind of stuff really matters. Charlie Munger, God bless him.
Yeah.
They missed out on Apple. They didn't get Apple early, and so a lot of these people, Warren Buffett, etc. Warren Buffett told Bill Gates to give a lot of his money away, and while some of that might have gone to good use, if he had not sold his stock, he would still, be up near where Elon Musk is in terms of how rich he is. So, not everything that they say, I think, should be written in stone. And a lot of times, it's the older generation that misses out on the technology, because they can't see it, because it was never part of how they made their billions of dollars. So, of course, Warren Buffett loves the system that it's in now because that's what made him a multi-billionaire. So if I was in his shoes, I'd be like, no, we don't need to change anything because I don't want to give my money away. You know what I mean? I mean, that's my thought. But look at what the charts are saying. Look at what the market is telling you. Everyone, all the talking heads, all the noise, doesn't matter. As long as the chart's doing this, you just follow it, man. And that's with the stock market. That's with crypto. That's with anything. The housing market, it might be a bubble, but it's still doing this. So not time to get off yet. That kind of thing. So just, if you can learn to read charts, you can ignore 99% of what's said out there, or at least put yourself in a position where you can listen to it, understand where it's coming from, why they're saying it, put it through your own filter, and then look at the chart and go, oh, yeah, okay. Nope, we're fine. And that's one of the things, especially now coming on, off of a wild ride where at the beginning of the year they said 7 rate cuts, and then all of a sudden it went none, and now they're saying, well, at least 2 or 3. And so the way that you kind of parse through that noise is just look at the chart. What's the chart telling you? Is the market in an uptrend above its 50-day moving average, or is it below the 50-day moving average? If you just have that as a guardrail, Mike, you'll outperform most fund managers or most people that people give their money to have them manage it for them.
Yeah. And it's great to break old thought patterns. So obviously, if you've had success in a certain system, you're going to have a bias towards that. But I respect people like Kevin O'Leary, who has done well in legacy finance, but is always looking for that next score. And I mean, that's the smartest mindset, I think, for an investor, in that look over the fence, see what else is available, and get out of the comfort zone and look where you can make money elsewhere through different means, through different technologies like digital assets. You know what I mean?
Technology always leads.
Yeah.
It always leads. So look at artificial intelligence now.
Yeah.
Look at how big that narrative is of everyone realizing that they're under allocated to AI, and that AI is coming and it's probably going to change all of our lives. And now we're seeing Nvidia, a $3 trillion company. So technology leads. Blockchain, I believe, is going to be a part of that technology, a part of that evolution of technology, especially with artificial intelligence. Artificial intelligence can tell you what's fake. Blockchain can tell you what's real. And so I think you need both of those together. You can make a deep fake of yourself saying whatever you want on video, just through an app right now. And for that to be verified, for your identity to be verified, I think you're going to need blockchain technology for that, because it can be checked and rechecked, and it can be relied on and not corrupted, in most cases. So I think that between AI and blockchain, man, like we are on the cusp of some really interesting things happening.
Yeah, I can't wait for our next conversation because I'm having you back on here, man, because I love hanging out with you, Scott.
Thanks so much for having me on, brother. This is a real honor. I'm a big fan of your show, and just really appreciate the grind that you and your partner do. You guys do great work. So I'm just honored to be a part of it, man.
Thanks for being here, man.
All right.
And that'll do it for this edition. We're out of here. You guys know where to find us. MikeCPodcast.com. We're on Rumble. We're on, I always say X. I want to say Twitter. Same thing. But and all the other platforms. So you know where to find us. And thanks for hanging out with us. We'll be back next time. Thanks. See ya.
The Mike C Podcast.